Okay, time for the rant on November 18th. I just got back from a round the world trip. I've never done that before, all the way around the world. And on top of that, all the way around the world in the wrong direction for jet lag. For people who understand jet lag, for some reason when you go east, it's twice as bad. I think you're going against the Earth's rotation or something. So I will never do that again. One thing happened when on vacation in Turkey, which was wonderful, by the way, and perfect weather as usual there. And then a tour in Australia and then back here. Normally I would go to Australia the right way, going west, and come back and get hit with the worst jet lag coming back, which is much better. So whatever, it all worked out, and I'll just never go east again. Now, the markets are kind of in the same place they've been. We finally had that first crash, which finally qualified as a first crash. So very high chance we put in the top back late last year in different times between November and early January for the markets. And we've seen that first wave down. I would have loved to see it be 40%, but it's 34% on the NASDAQ. And we're in what we call kind of the second wave bounce sideways. And some of the stock indices, including even China, bottomed more like in the June of the first crash. Some of them a little later in October, early November. But we've been moving sideways since then. So the question is, do we get the next wave down? The next wave down is curtains for this market. Of course, that is exactly what I expect. That this is a major top, a major crash, and not just a deeper than normal correction. But the markets have to prove that here. And you know the markets, they're going to hold back as long as they can before they show their hand, as I've been saying recently. So on this bounce on the NASDAQ, which I use as the key market, we hit almost 10,000. We bounced to 11,500. That's the first area of resistance. That could have been it. I'd say on the high side, 12,300. So that's what we're dealing with here. But as soon as especially if we hit that higher number, it's gonna really be time to get out of any last long positions, or for people who want to short the market, that's going to be an ideal short, because the next wave should be the same size as the first one and often higher. And the first downturn, now that we stretch it to more recently, is as much as 6,000 points on the NASDAQ. So that could take us down in the kind of 6,300 or lower area, down 60% or more by early next year. So that's when people are going to know that this is a major correction and this is a crash. And obviously we have the debate, are we in recession or not? We're going into recession, okay? And it's going to be the deepest one. I think it's going to end up being a short depression into 2024-25 or so. Now, the bonds, this has been the strangest time. In the 2007 stock top, the TLT bottomed and started to rally 6 months before that October stock top, and stock started going down. This time, it only looks like it finally bottomed here recently, in late October. But I still see it at least doubling. So it's at 196 is the target on TLT. In Zira is probably 210, 220. So both of these are going to be huge rallies, and the markets also did there what you'd expect. I've been saying we will not see a rally this big in the treasury bond market in the past decades or in future decades. So it's going to hide this one as well. But hang in there with these positions, and if people want to add, this is a good time to do it. It does finally look like we put in bottoms there. Now, the markets, the stock markets, NASDAQ now is 31% off its top, and my target is down 92%, at the bottom a couple years from now, okay? S&P 500's down a good bit less, 18% with a target of 86%. So the NASDAQ's about a third of the way there, and the S&P will have to start catching up. The Russell 2000's down 25%. The Shanghai in China's down 17%. Nikkei holding up the best in Japan only because it's not done that well for so long and been a laggard because it topped, 30 years ago or something. The DAX has held up well, only down 11%, and that's going to have to catch up. So Bitcoin, of course, leading, which it should, down 76%. Remember, my target for Bitcoin, same as Amazon and the dot-coms in the first tech bubble crash, it's going to be down 95, 96% before this is over. My target is around 3250, and that's just the late 2018 lows, the fourth wave, I call it. The other thing we're seeing, China's home prices are finally cracking. Sales have been slowing for a long time, 13 months, but home prices now down about 3% over the last 13 months, and that's really saying something for the biggest real estate bubble that has been so supported by the government and everybody. In the United States, home market's starting to crack. You have to remember, stocks are going to lead this crash as they have. Housing is always slow to top and much, much longer to bottom. The last housing correction, which was, 34, 37% by different measurements in the US, took 6 years, okay, to bottom. So housing may be slow to start here, but do not be fooled. This is the last chance to sell your home or any real estate, commercial or otherwise, or international vacation, because this is going to be the biggest housing crash of our lifetimes, past or future. So again, it's happening. This has been, the governments have held this off, but the signs are that this crash is underway. But we need to see this next wave. We need to break the new lows one more time and have follow through. And I think that's coming sooner than later. And boy, I'd be selling into any market rallies here, anything you have less. And if you're looking to short, 12,300-ish is the ideal target on the NASDAQ. But remember, we might get there. So you have to take that into account when you're doing this. So again, this is going to be an exciting time for people who see this coming. I think 2023 is going to go down as the worst year in the stock market of our lifetimes. So get ready to profit from that, and I'll keep you updated.